Well, what we're talking about segues beautifully into our next question, which was pretty popular. When bottom? Or,
Yes. This is a
yeah,
good
saying differently, where bottom,
where
I
bottom.
guess.
Yeah, so when is who knows? Where bottom? Great question. So there's a couple of things that I really want to highlight here. Let's start with I'll pull yearly cost basis, ETF cost basis, and strategy cost basis. Okay, so where bottom? Uh, let's just imagine, for interest's sake, let's imagine we go into a bear market. We've just started. The top is now in at 124K. I would say at a minimum, 6 months to a year would be that kind of journey. When it bottoms, who knows? But where is a much more interesting question. And maybe actually I should probably bring in, let's do realized. That's a good one. Okay, so there's a series of confluence events that I think are really, really interesting to think about. This is the yearly on-chain volume weighted cost basis. So the right way to think about this, where's the average sat stacker who started buying on the 1st of January of that year? Where's just that average cost basis? Now, the 2024 chop solidation range, I think, is really, really important. We obviously bottomed right on top of it in the tariff tantrum. Let's just say 75K is like a nice level. Let me just quickly jump over to our heat map because that's going to paint a really nice picture. Still a really, really dense zone. And if I think about what happened in 2024, we proved that we're a $1 trillion asset. A $1 trillion market cap is about 50K ballpark. 50, 60K, 1.2, 70K is 1.4 trillion. We got up there in 2021. We got slammed back down to 29. We took a 50% haircut. Then we tried it again. And then we got slammed back down to 17K. The market said, sorry, mate, you are not a $1 trillion asset. You haven't proved your mettle yet. Then we spent 8 months where every single dip was bought, including when the German government sold 50,000 Bitcoin in like 3 weeks. The market rallied through that. ETFs are live. So like if I just like think about this from a fundamental standpoint, ETFs go live at 45K. Do we belong at 45K? Can we get there? Maybe. Do we belong there? No way. Deep value. So 40K, in my view, like if it happens, it's like Stack City. Next level of saying, well, that's probably not going to happen. Well, what might happen? Getting down into this chop solidation range, world economy starts blowing up. Recession happens. People are just selling everything. They don't know what to do. What is Check the Hodler going to be doing? He's going to be looking at this range and saying, yes, please. You're going to give me a bite here again? Absolutely. I'm stepping in. And like, I say this from my perspective, but I know that there's institutions and big money and smart guys out there. He, with the cash at that point in time, is going to be gobbling this thing up because Bitcoin is a $1 trillion asset. We're in the top 5, 6 assets in the world now. We belong there. We deserve it. We deserve being there. So now let's go back to our cohorts. Well, if we come down to 60K, let's say, class of 2023. So that's people who started buying just after FTX exploded. These guys are now very up on their position. Are they going to catch the floor at 60K? Yeah. I mean, do we belong down there? No, not really. So now we're getting like 1.2 trillion. I can't convince myself we belong there. Deep value. Class of 2024, the people who started buying with the ETFs. Okay, now we start getting interesting because these people haven't really been tested. They got a bit of a test here in 2024, but like, the ETFs are new and it's all exciting. What if they got a second whack? That's sitting down there at 78K. And you'll see something really interesting here. 75, top of the chop. Everything below there, in my view, I'm a happy stacker. 78K, give me 72. Imagine the headlines. Then we look at the ETFs, 79K. Imagine the headline, BlackRock suddenly underwater, average BlackRock investor, terrified, blah, blah, blah. You can see it happening. What happens when we get down to 73K? Strategy. Michael Saylor, inches away from exploding, about to implode. True market mean, that's the average on-chain cost basis, 78K. 78, 73, 78, 78. Imagine a bottom coming down and hitting somewhere between 70 and 80. Where bottom? Like, this is why the true market mean is such an important metric. It's like, again, I've spoken about this before. I'll just quickly reiterate. I lost a bet to my colleague at Glassnode back here because I thought, I've written coin time economics. I've done like all this deep dive thinking. I'm like, I think the true market mean is the real realized price. The realized price was trading down here at like 22K. And I was like, I don't think we get there. So I put $100 on the line, which is now worth like $1,000 because he bought Bitcoin with it. And of course, we went straight through it. But what did it take to get below this true market mean? Well, Luna had to market sell 80,000 Bitcoin. Three Arrows Capital had to be blow up and lose $2 billion and just evaporate that. And then we had to have FTX implode being the biggest fraud in human history. I can't see. Yeah,
those are inset. Like, what's that? The equivalent now? What's the like Coinbase blowing up?
Strategy has to implode, and I can't see that happening. So, what would a bear market look like if it happened right now? In my best case, like my best estimate, if I had to just like draw a number, walk away and do zero analysis between now and the bear market bottom, if we're in a bear, that 70 to 80K zone, sweet spot. Doesn't even mean we'll get there. I think the bulls defend it, but like headlines, I can see the headlines. I almost want to see the movie because I think it would just be so picture perfect. And again, I've got to put these theories to the test, and we're kind of thinking about this well and truly ahead of time. But you can start to see that confluence. We belong above $1 trillion, is my honest opinion, and everything below that is just like gift.
I've been reading about Stoicism lately, and one of the concepts is that you should write your own funeral speech or like plan for your own death. This is very heavy for this session, but I swear it'll make sense. One great exercise is to look at that first chart you said with all those levels and just sit for a bit, have a shower and just think about Bitcoin being 80K. Just pretend it is.
Visualize
and
it.
Just live in it for a while and it won't own you as much. Like everyone visualizes 200K, 500K so intensely that when it's not that, you feel actually bad. Flip it. Just get used to the idea that it might be 80K. Like you just open up CoinMarketCap and it says 80K. Just have a thought. And honestly, that's worked for me a lot as just a humble hodler. I don't really care that much about downside anymore. I just go, okay, there's going to be more opportunities. There's a shitload of smart money out there that's going to buy. People bought that 22K FTX bottom and they've been hodling ever since.
Oh, yes.
There's so much smart money out there that do not care about the price going up. They're just trying to scoop off the bottom. So yeah,
fully agree. And I think a perfect example of that, it's a great framework. If folks who've been around the newsletter for a while, remember I started talking about, I think it was in December. It was up here, December somewhere. It was like 100 and something, 105 or something K. And I said, this air pocket, just eye on the prize, just maybe. And then we got all this distribution, all this purple is demand, but it's also sell side. And then suddenly we're in the air pocket. And again, this is not because I can foresee the future. I definitely can't. But I was just saying, let's just imagine what happens if we go down into that zone. And by the time we got there, we'd already thought about this for several months in advance. It's like, oh, well, here we are. Surprise. Now what am I going to do about it? Because I made the decision. I'm going to stack sats as hard as I can right down here at this zone because I've made that decision ahead of time. And you mentioned the bottom buyers.
Oh, yeah.
I love this chart. So just as a quick snapshot, this heat map is USD weighted. So we take all of the coins and we weight them by the dollars. So if we just look at the early history, there's like nothing, right? It's all yellow because the dollars are so much more powerful up here at 100K. But on a Bitcoin basis, on a supply basis, look at these guys buying the FTX bottom and they are still there, right? That's some hardcore stuff. That's the kind of environment that Bitcoin is thriving, right? Just sit tight, survive, and visualize these things in advance.
Yeah. And those guys are out there with stacks of cash, just waiting to scoop up bottoms again.
Yep.
Like that's their entire job. So
institutions are good at this stuff too. Institutions are patient. Oh, yeah. That's a really big difference here. Institutions and Bitcoiners actually have a lot in common in that they're patient, they're price insensitive, and they know what value feels like. And they will wait until they get value, and then they'll step in.
Yeah, and they don't hire top buyers for their investment teams. Like they just don't, right? You only buy bottom buyers, right?
There will always be dumb institutions, no question about that. But leverage is a wonderful thing in that front.
True.